Nobody likes taxes, but we all have to pay up. The government cannot depend on our goodness to keep paying up our taxes. So there are rules and regulations, and it is compulsory for us to pay the taxes as laid down by the Income Tax Act and the various regulations. There are three taxes that we all pay. The first one is income tax. Income tax is payable on all the incomes we receive from salary, from business, from investments and all such. Service tax is something that we pay if we are a professional. So service tax is payable where we offer services for a fee. And if we have wealth and if the value of this wealth is more than 30 lakhs, some items are included here and some items are excluded, then we have to pay a tax on any wealth which is more than 30 lakh of rupees. So it's important for us to know how much we can keep from whatever we are earning after paying the taxes we are expected to pay. To understand what is the amount of tax you have to pay, you need to have your books in order. The first thing you have to do is to bring together all the heads of income that you have earned. Income you have got from your salaries, your business, your investments, and all of these have to be brought together for a given year. The typical financial year will run from 1st of April till 31st of March. The first step is to bring this income together. But all of this is not taxable because the taxman will allow you some incomes which are exempt. For example, the income that you have earned from dividend is not taxable. It's an exempt income. So there is a whole list under the Act which includes various types of incomes that are exempt from tax. So you take away those. And then, is the remaining amount taxable? No. The taxman allows you a further concession. There are deductions. If you made certain kind of investments, if you gave away money in a certain manner, if you incurred certain kind of expenses, now all of these can be charged against your income and claimed as deduction. The amount that remains is called your gross taxable income, or the amount on which income tax will apply. So in order to pay your tax right, you need to have your books in order so you know what's happening under all of these heads. There is a slab rate which is announced by the government, and at the time of the budget, the government will tell us what is the tax rate that is payable. As of now, you have the first 2 lakhs which is exempt. Then for all incomes above 2 lakhs and up to 5 lakhs, you pay 10% as tax. For income from 5 lakhs to 10 lakhs, you pay a tax rate of 20%. For all your income which is higher than rupees 10 lakhs, you end up paying 30% as tax. Now, assume that your taxable income was 15 lakhs. It doesn't mean that you're going to pay 30% on this 15 lakhs. What happens is, this amount is divided under these slabs. Now, the slab rates that apply to you, there's one number which you have to remember, which is called as the marginal rate. That is the last rate at which you stand. For example, at a 15 lakh income, your maximum marginal rate is likely to be 30%. How to save taxes? The tax rules allow you to plan your taxes and take advantage of the various facilities that the tax laws provide. You don't have to evade taxes to be able to enjoy these benefits. There are 4 things that you can remember. The first one is how you want to structure your income. If you are an independent professional who's willing to pay advance taxes, you can also claim expenses. If you're a business, there are various business expenses that you will incur which can be deducted from the revenue that you make. So structuring is the first point. The second one is deductions or investment. If you invested in a few avenues, specific mutual funds, bonds, saving schemes, deposits, all of these investments are available as deductions from your income. So you invest for yourself, but you end up saving taxes as well. Third way to do it is to donate. There are several charitable trusts, organizations which are set up for a noble cause. Your donations to these facilities will let you be eligible for some deductions. So donate. And there are support that you can provide for your children's education, for the elderly, for the deceased, for the unwell. There are specific deductions that are available when you support such causes. So remember these 4 elements: structuring, investing, donating, and supporting. These 4 actually enable you to bring down your tax liability well within the confines of the law. So don't evade taxes, pay and pay smart.